What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do technical analysis on weekly charts of all of the indices, the VIX and Bitcoin, and we'll try to answer the question, is the bear market over? First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did have another very bullish week in the SPX, and as you can tell, we did have the second week in a row closing back over our weekly 20 simple moving average. And it does look like we are breaking out of the downtrending channel. Now, to answer the question of whether or not we are out of the bear market in the SPX, we will want to see the SPX breaking above this very critical resistance at 41.58 and then getting over the 50% retracement of this bear market, which is right around 42.28. If we can get over those two critical resistance levels, it's going to be very hard to deny the fact that the bear market is over. Now, it's already starting to look like the bear market is over, but there are still going to be people saying that the bear market is not over until we break through this very critical resistance. Now, we'll be looking at all of the indices today, and you will see some of the indices are starting to get bullish breakouts, but on the SPX, we are clearly finding resistance at that level at 41.58. Breaking above that will be the next weekly higher high, and we already do have the weekly higher low. So you cannot compare this to March, where we did not have a higher low. Yes, March was a very impulsive bear market relief rally, but there was never a higher low back in March. We had the lower low right after the lower high, and then we continued down into the bear market. The difference this time around is that we did make a higher low back in July, and you can clearly see that is a higher low than the low that we had in June, and now we are seeing a very impulsive rally off the lows. And every time you see a stock market bottom or the end of a bear market, you want to see a very impulsive rally off the bottom, and that is exactly what we are getting. So while we cannot say with 100% certainty that the bear market is over, it does look very highly likely that the bear market is over, and we will know very soon once we get these bullish breakouts above this critical resistance. And do keep in mind that a bull market does not mean that we just go up in a straight line forever. What we'll be looking for a bull market would be a higher high, and then we still need to put in a higher low before we continue higher. So you always will have a buying opportunity right around the corner if you're patient. Yes, we are likely going higher, but as you can tell, the risk and reward is just not there to the long side. So it is very likely that the next best buying opportunity is going to be the pullback for the next higher low, but it will take a lot of patience because that could be a month away. So as always with trading, it takes a lot of discipline and patience, so it will take a lot of patience to buy that next higher low, and then we will have confirmation that the bear market is over and that we are going back into a bull market. Now, do keep in mind, a lot of people are going to be doubting this rally, and that is completely normal. If you were trading back in the crash of 2020, there was plenty of bears the entire way of the V-shaped recovery out of that hole, and only 4 to 5 months later, we were making all-time highs, and people stayed bearish through the entire bull run of 2020 through 2021. While I'm not saying this is exactly the same as 2020, I am trying to tell you that sentiment should remain bearish while we develop a bull trend. That is just completely normal psychology because people just witnessed a 7-month-long bear market and they are not going to be quick to flip to bullish. I, however, suggest that you leave the past in the past and follow the current chart that we have in front of us. And right now we do have a very impulsive bull trend. So I do suggest, if you're still hanging on to your bearish sentiment, that you start considering the fact that this is a bull trend and you just manage your risk accordingly and try not to have too much recency bias by just looking in the rearview mirror only. This is a very impulsive rally off the lows. We are getting a bull breakout above our channel, and we are back over the 20 simple moving average on the weekly chart for the second week in a row, and we are getting very green impulsive candles higher off the low. So there is a lot of evidence that we are likely going back into a bull trend, and that could be a sustainable rally that could take us to year end. So watch that very critical resistance just above at 41.58 and then 42.28. And once we start breaking above those levels, that will likely confirm that we are heading back into a bull trend, which means you will want to buy the dips of the higher lows because we will continue to make higher highs afterward. Now, as always, you still need to manage risk, and one of the best levels to manage risk from is going to be right around 40.40, which is the bull breakout of our downtrending resistance trend line that we did break out of 2 weeks ago. That is a great level to manage risk going forward, because below 40.40 we could come all the way back to 3,900 or 3,800, and that is a lot of risk to take on. So you will want to use that risk level up there right around 40-40. On the bear bull survey, you can see that we still have about 39% of the people that are bearish, and we have about 30% bulls and 30% neutral. So we are still stacked to the bearish sentiment, and there is still a lot of bears out there doubting this bull rally. This is more than likely going to continue to lead to more short squeezing as the people that are neutral continue to buy into the rally and the people that are bearish continue to get short squeezed. So I do expect to see this survey trending towards more bulls than bears before the end of this rally, and then we will likely reverse course and make that higher low just as the bears cover their position and start to turn bullish. Remember, the market loves to hurt the majority, so once the majority become bullish, we are more than likely near a local top and due for that pullback. Don't be part of the FOMO crowd and don't be part of the crowd getting short squeezed. Follow the trend and manage your risk and just follow what the price action is telling you, and try not to join the majority of the crowd because they are usually wrong, and right now the majority are still bearish. On the NASDAQ 100 NDX weekly chart, you can see that we also had another very bullish week, and we did close above the 20 simple moving average on the weekly chart for the second week in a row, and we did find resistance right at that resistance level at 13,307, which is going to be a double resistance from our resistance trend line and the previous low of resistance. This is a very great risk reward setup because, as you can tell, your risk level is just below at 12,947. So as long as we are above that level, you can stay bullish, and the next bull breakout above 13,307 could take us all the way back up to 14,307, which is another 1,000 points higher. You can see the price action is breaking impulsively out of the uptrending channel, and we are getting a very impulsive rally off the low. And we also did break out to a higher high on the weekly chart after putting in a higher low. So it does look like the tech sector is leading the way higher, getting the first bull breakout before the SPX. And that is exactly what you want to see in the very early stages of a bull market. You want to see the tech sector leading the way higher, and that is exactly what we see. So with the NDX breaking out, we now have higher lows and higher highs on the weekly chart. And the next bullish confirmation will be the break and close on the weekly chart above that resistance trend line and our resistance horizontal level at 13,307. So watch that level very closely for critical resistance, with the critical support and risk level just below at 12,947. We're going to get confirmation very soon that we're out of the bear market once we break through all of these resistance levels, which will mean that it's going to turn into a buy the dip bull market until we lose a very critical support level, and then we can start getting more risk off yet again. But so far you can clearly see a lot of bullish price action, and we clearly have the bull trend in the short term that is only getting more impulsive now that we're starting to go more vertical and breaking out of our upward trending channel. On the Dow Jones weekly chart, we didn't get quite the bullish week that we had in the NDX, and we did squeak down just a little bit from the previous week, but we are still 2 weeks back over the 20 simple moving average, and we are breaking out of the upward trending channel resistance. Critical resistance will be above right around 32,885 and 33,272, and then we will have the resistance from the top of the downtrending channel. You can see the Dow Jones is not looking quite as impulsive as the NASDAQ 100, but that is expected because we do want to see the tech sector leading the way. You could use a critical risk level in the Dow Jones right around 32,600 and stay bullish above that level, because if we break that level, we could be coming all the way back down to 31,500. Now keep in mind, we still do have a gap to the downside, so you do want to be very cautious if we do start losing critical support, because it is still possible that the bear market is not over and we are still hitting critical resistance before the next leg lower. It seems unlikely, but you can never rule it out completely as a scenario until we get those bullish breakouts of those very critical resistance levels. On the Russell 2000 weekly chart, we did get a very bullish breakout. Just like the tech sector, we did get the breakout of the higher high on the weekly chart, and we did break through that very critical resistance, which was right there at 1889. And not only did we break that level, but we broke that level very decisively with a very bullish looking weekly candle. So as you can tell, the small caps and the tech sector are clearly leading the way higher. And I do believe that is exactly what you want to see in the early stages of a bull market. So in the Russell 2000, you can now use 1889 as your critical risk level, which is your very critical support, because if we break below that, we could be coming all the way back down to the 20 simple moving average or possibly even lower. So that will be your critical level to use as risk, because if we break below that, you will want to start getting a little more risk off. And the next critical resistance is just above at 1968. You can clearly see the Russell 2000 is breaking out of the downward trending channel for 2 weeks in a row, and you can clearly see the higher low, higher high, and very impulsive price action on this weekly chart. So this is a very strong buy signal, and this is just another hint that the bear market is likely over, and we're going right back into a bull trend from these lows. On the VIX weekly chart, you can see the VIX continues to get crushed with yet again another red week, and the VIX did close below the support trend line, which was right around 21.3, and we closed just below it. So with the VIX getting crushed and the bull breakouts in some of the indices, you can clearly see why it looks like the bear market is likely over and why it looks like we're in the very early stages of the next bull market. The next likely target for the VIX will be 20, and if the VIX starts closing down below 20, that should give us the bull breakouts to confirm the bear market is over and we're going back into a bull market. So that will be a very critical test for the VIX. If at any point the VIX starts spiking back above 25, we are likely going to continue the bear market. But as you can tell, that is just not what we're seeing, with the VIX closing 3 weeks below 24 and getting very close to testing down towards 20. On Bitcoin's weekly chart, we're currently trading right around 23,000, and it does look like we continue to bounce off of that support zone at 19,000. And from here, it looks very likely that we're going to test the resistance trendline, which is currently right around 27 to 28,000. If we break that resistance trendline, the next critical resistance will be right around 32,000. So look for that bull breakout and test of resistance to get Bitcoin out of the bear market. If at any point we get rejected from resistance, we'll more than likely retest support at 19,000, and a break of 19,000 should send Bitcoin down to 12,000. But so far, it does look like Bitcoin is still in the bear market because we don't have any confirmation of a breakout of resistance, and we are still clearly making lower lows and lower highs in Bitcoin. On the ARKK weekly chart, we are starting to get bullish indications that we could be ending the bear market. Even though we are still down below our support trend line, we did get 2 bullish breakouts, which was the weekly close back over $48, back over the weekly 20 simple moving average, and back above the resistance trend line. So it clearly looks like the ARKK ETF is starting to break out of the bear market, and the next bullish breakout will be the break above $55, and that is going to be a very valid price target in the short term because we are likely going to see a lot of short squeezing in this ETF now that we're getting the bullish breakout. So this is a great sign that speculative stocks are starting to get bullish yet again, which is also another sign that we could be heading back into a bull market. So jumping back over to the S&P 500, there are a lot of clear signals that we could be heading back into a bull market, and we still have a lot of retail bears that are doubting the trend and saying that the bear market is not yet over. I know more often than not that the majority of retailers are usually wrong and the majority is still bearish, as we're starting to get a lot of bullish indications, and I do always trust the chart over anything else. So with the charts looking bullish and the bull breakouts in the small caps and the tech sector and high retail bearish sentiment, I do believe this rally is going to continue, and we will get confirmation that the bear market is over and we're heading back into a bull market, which will be a great buying opportunity on the next higher low. So stay disciplined and stay patient because that next higher low is probably a month or more out. But if you know what you're doing and you're preparing now, you'll be in a great position to take advantage of that dip, and you will not be part of the crowd that thinks the bear market is continuing on and we're going down to new lows. Follow what the chart says and have a clear, unbiased mind each and every day, and only trade the chart in front of you. Try not to have recency bias and look too far in the rearview mirror. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.